What's up everyone, it's Caddy with MoneyVest. So markets pushing higher here with the Nasdaq, S&P, and the Dow Jones, all three rallying on the day today after, of course, Jerome Powell's remarks at the Jackson Hole Economic Symposium, which were very, very neutral. I wouldn't necessarily call this a very hawkish speech. Wouldn't necessarily call this dovish either. It was neutral. It was a very, very straightforward with kind of laying out exactly what they're planning to do, which is actually very similar to what he's already mentioned. But as we already know, the markets are now very much understanding and knowing of the fact that we are closer to the end of this rate hike cycle than we are at the beginning as we were last year. Now, one more thing, rates flipped. So we flipped once again, and now as it stands, we are fully aligned except for once again one discrepancy, which is on rate cuts, which I will break down in this video. There is, of course, my Wi-Fi out in the apartment. My apartment Wi-Fi is not working for the last 12 hours. I've already emailed the management team for the last, all night. I've kind of, bothered them, but because Wi-Fi is not working. So I'm using my hotspot to hopefully make this work, and my hotspot hopefully is going to be strong enough to upload this video, but if not, I will definitely try to get it out as soon as possible. So thank you so much for joining. Hope you all enjoyed, find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the buy and sell alerts, options alerts, trade ideas, members only private videos, intrinsic value spreadsheets. Everything is going to be included, and there is a 16% annual discount available till the end of this month. So there's 4 more days left if you want to take advantage of that, and there's only 5 spots left. So again, you can join with the link down below. 5 more spots left, and we'd love to have you on board in our MoneyVest community. So Fed Chair Powell calls inflation too high and warns that we are, quote, prepared to raise rates further. So he says, while acknowledging that progress has been made and saying the Fed will be careful in where it goes from here, the central bank leader said inflation is still above where the policymakers feel comfortable. So obviously it's still trading above 2%. And he noted that the Federal Reserve will be flexible in its contemplates further moves, but gave little indication that it's ready to start easing anytime soon. So obviously there were no cuts mentioned in that speech, and we were obviously live during that time. And he said, and I quote, although inflation has moved down from its peak, it remains too high. And of course, we are prepared to raise rates further appropriate and intend to hold policy at restricted levels until we are confident that inflation is moving substantially down towards our objective. So again, very, very similar to what he has already talked about. Nothing the market doesn't already know. But inflation was running well ahead of its current pace back then. Regardless, Powell indicated it's too soon to declare victory, and even with the data this summer largely in the Fed's favor, June and July both saw easing in the pace of price increases, with core inflation up 0.2% for each month, and the lower monthly readings for core inflation in June and July were welcome, but 2 months of good data are only the beginning of what it will be to take to build confidence that inflation is moving down sustainably towards our goal as well. So again, very, very, data oriented, data dependent, and that's really what the policy is going to look like. Now, when it comes to the interest rates, right? 80% probability that we are going to see a 25 basis point hike, 20% probability that we're going to see actually 80% probability, let me rephrase, 80% probability that we're not going to see any rate hike, 80% probability that the rates are going to stay steady at where they are, and 20% probability that we're going to see a 25 basis point hike from the Federal Reserve. This right here is how we have shifted, folks. So again, this is for September meeting only, but if you look further out to November and December, guess what? The market is now pricing in rate hikes. The market is plugging in a 25 basis point increase in the rates going as far as November 2023, so later this year, and the rates to get up to 550 to 575 basis points, right? So 25 basis point increase in November, December, and then cuts starting in January of next year, so 2024. But the market, of course, is pricing in 5 cuts, so 1, 2, 3, 4, 5, same terminal rate as before. Yet the Federal Reserve has pretty much mentioned 4 rate hikes of 100 basis points and getting down to 4.6%. Yet the market's pricing in for us to get down to 4.25 and 4.5%. So that's the only discrepancy now. It's shifted a little bit. Earlier, the discrepancy was that we weren't expecting one more rate hike in 2023. We were expecting 4 rate cuts, which is very much aligned with the Fed. And now the discrepancy is not the rate hikes, because now the market's flipped and it is expecting a rate hike in 2023, one more, but it's expecting 5 rate cuts as opposed to Federal Reserve's 4. So that's, again, a little bit of a discrepancy there. Eventually, again, this is the market's way of telling us it's warming. It is getting around the Federal Reserve's estimates. It's getting around the Federal Reserve's expectations. And eventually, we are going to be aligned with what the Federal Reserve is telling us. Sooner or later, it's all going to be one. So Microsoft, Apple, Tesla, Oracle, Adobe, all pushing higher. So markets were super green. They were obviously very volatile. We did sell off, then we got bought back, then we sold off, then we closed green. Nvidia was down 2.4%. This right here is the entire market. So everything was green except for obviously Nvidia selling off a little bit over 2.5%. Financials were lower. Communication services slightly down. Basic materials slightly down as well. So cyclicals, energy, technology, industrial utilities, all sectors pushing higher. All 11 were green on the day. And of course, over the last 1 week, we've got most sectors green except for defensives and energy. And over the last 1 month, of course, energy and cyclicals are pushing higher. Everything else is straight up down. Heating oil, we got orange juice, gasoline, oat prices, sugar prices, everything pushing higher, with rough rice, lean hogs, palladium, coffee, wheat, lumber prices, everything selling off. Bitcoin just hovering over 26,000, Ether just over 1,600 as well. So this right here is going to be Bitcoin's chart, just consolidating sideways at the moment. Of course, after consolidating sideways for a very long time, it broke down pretty aggressively over here with a massive red candle, and now it's trading sideways again at just hovering over $26,000. Ethereum also in a very similar sort of pattern. It was trading sideways, consolidating in that range for a very long time. Of course, broke down, and right now it is trading sideways, consolidating just a little bit over 1,600 as well. Again, my Wi-Fi is out, so I took the hotspot, screenshotted all these technical charts that I'm going to go over, and I'm going to cross my fingers after the video is done that the hotspot is strong enough to upload this video, process this video for you guys to watch later today. So oil, crude oil, a little bit under 80 bucks a barrel. So this right here obviously has been a pretty strong resistance. Every time we get up to that red rectangle, we get rejected and then sold right back down. But right now, of course, it is pushing back up over 1.5%, although still in a little bit of a small downtrending channel. So we'll keep a close eye on whether it breaks back above this $80, $81 resistance and continues this upwards momentum, which obviously is going to put upwards pressure on inflation in our future prints as well. Volatility here, a little bit under 16. Very, very significant sell-off today, down almost 9%. So selling off pretty aggressively. 14 is going to be that next level to pay attention to. And of course, 20 from an upper limit standpoint is going to be that resistance to watch on the VIX as well. Yields, 4.239%, basically flat. We are starting to see a little bit of that divergence once again kind of kick in with the US 3-year at 4.7.5%, with the 2-year, which is the white line. You'll know it continues to push higher, a little bit over 5%, with the 10-year, which is the red one, is also starting to come down a little bit, 4.239%. So we're seeing a little bit of that divergence in the shorter end of the curve, especially when you come over to the 1-year, the 2-year, the 3-year, the 6-month, and the 3-month, right? So short end of the curve is certainly pushing higher, and it's moving up, and the long end of the curve is certainly going down. Even the 20-year, you can see that it's been rolling over. That's the orange line. The 5-year is going to be the yellow, which has been a little bit more back and forth, and the 30-year, which is the green, the bright green, which has been selling off along with the 10-year as well. So you are seeing the short end of the curve, which is pushing higher, and the long end of the curve coming down. So that's, again, that means that there is some expectation, uncertainty in the short term. Long term, the markets are still pretty confident the economy is going to continue to grow. Inflation is not going to be a problem over the longer term as well. So that's something to keep in mind from a risk reward standpoint. This is the S&P 500. So we are still in the context of a potential head and shoulders. As I mentioned, left shoulder, we've got a head and the potential right shoulder forming right now with a very strong support sitting right here in this green rectangle at 4330, 4400. Very, very strong levels to watch at those levels for S&P. There's a lot of demand that stepped in on the day today. So we came down to 4356. And of course got bought back up to over 4,400, and the S&P up over 67 basis points on the day. So we are green on the week, despite of course Nvidia's earnings, despite Jackson Hole Economic Symposium. We are green on the week, as exactly what we mentioned, and thankfully I predicted over the weekend videos. Going over to the Nasdaq, same exact thing, right? 13,590 is where it's at, up almost 1% on the day, getting a lot of buyers to step in inside this green rectangle. So we're seeing a lot of demand once again coming back in, and resistance is going to stay put at this level where we are getting rejected at around 13,800, closer to 14,000. A potential head and shoulders once again forming with a left shoulder, head, and a right shoulder also forming for the Nasdaq as well. Going over to Apple, up over 1.2%. So this right here is a previous resistance for Apple, right? We've gotten rejected here 3 times. And of course, Apple hit a new all-time high at $3 trillion market cap, broke out, and now that old resistance is very much acting like a new support over here. So you can see that we're bouncing off of these levels. We're not really sort of like breaking down or sort of pushing higher, but instead we're just trading sideways, right? We're moving sideways in the 170s for Apple right now, and of course getting rejected a little bit from those moving averages as well. Talking about Amazon, Amazon is in this uptrend, right? So higher highs and higher lows, getting very, very nicely bought up at those moving averages and that higher low. So we got that confluence of that support for Amazon at those prices. So we are seeing a very nice move back up, a little bit over 1%, 133. Resistance is going to stay put here at that red line at 137, all the way up to 146. And support level is going to be that higher low, as low as $126 per share for Amazon. Talking about Tesla, Tesla's been very much back and forth, right? It's like red, green, red, green, red, green. It's just been one day is up, one day is down, one day is up, one day is down. It's just been really, really tight in that consolidation here, with buyers almost always stepping in at the top end of that green rectangle at 230s, and sellers almost always stepping in at those moving averages and this resistance that I pointed out at 240s. So that $10 range is really where it's trading at. I mean, even if you take a look at the day, it's crazy. 230 was the low for the day and 239 was the high for the day. So that $10 range is where Tesla is trading right now, and it's just not able to break either side. Like not able to break obviously that resistance, not able to break below that support. It's just the bulls and the bears. Like there's friction there, and they're just like going after each other, making sure that they make themselves known that they are present at those certain levels. But of course, eventually the one who overpowers is going to be the one that breaks the price in either direction. And I think that's something that we have to patiently wait for and see whether Tesla breaks out or breaks down. Moving forward to NVIDIA now. So let's just go over. So NVIDIA here 460 down 2.4%. So last couple of days, we have seen a little bit of profit taking for NVIDIA, no doubt about it, because it's trading at an all-time high, $1.2 trillion market cap. Everybody who owns the stock is already up on the stock. So 99% of investors are probably green on NVIDIA because it's trading at almost at an all-time high. So we're seeing some profit taking, which is very normal. We've got a huge gap to fill here in the 320s, 350s for NVIDIA, so keep that in mind. And again, just be mindful of the valuation and of course where it's trading from a risk reward perspective. Advanced Micro Devices has been slowly and steadily kind of bleeding. I did a video on them yesterday, so make sure they do check that out if you haven't already. I'm super excited to actually restart my position in Advanced Micro Devices. We'll be looking at $80 as a very nice intrinsic value and a support, technical support for Advanced Micro Devices, and that's really the level that I'm looking at for maybe selling some puts down, $80 strikes or $70 strikes in the future as well. Talking about PayPal, getting a little bit of a bounce, 79 basis points. So again, it's bouncing off of that support at $57. So this right here, very, very oversold at those levels, getting a bit of a bounce back up. Got those moving averages and of course a resistance all the way up to 69 to $71 for PayPal as well. Talking about Square, and Square here also very oversold. It does offer a pretty good swing trading opportunity, I'm not gonna lie. So support and resistance are very, very kind of like in a consolidated pattern. They're very clear for Square. Resistance at $83, $89. Every time it gets up to that level, it gets rejected and sells right back down. And this right here, the green rectangle, is very nice support at $51, $55. So we've got a nice 30, 40% potential swing trade opportunity here with the RSI MACD also incredibly oversold. So we'll be going over this trade idea in our Discord. We'll be kind of talking about it. Again, if you want to get access to all the trade ideas with proper risk management, with understanding of where your profit targets, your entries, your exits are going to be, everything's going to be included. Links down below if you're interested in joining our MoneyVest community. Meta here down about 44 basis points. So even though it got bought up like fairly quickly, this long wick to the downside suggesting there were buyers present and we pushed right back up. We do still have a resistance sitting roughly here at $300, 296, 300, call it around those levels. And of course support level in that sort of green line at 257. I have basically trimmed my Meta position down to like very, very low single digit percentage allocations now. I've taken most of the profits off the table and I'm super excited to do that, and of course raising some cash to take advantage of other opportunities in the market as well. So resistance is going to stay put at 300, support level at 257, 258. Netflix, on the other hand, pushing up over 2.2%, so very strong day, getting bought up from that support here. It's really just been consolidating sideways, very much very similar to some of the other companies out there, so just trading sideways. Resistance is going to be at 458, and of course support level is going to stay put at 410 for Netflix at the moment. And we got Google here pushing higher back up to over 130, 131, up over 21 basis points. But really similar to Tesla, it's not able to figure out where exactly what does it want to go, right? So we've got red, green, red, green, red, green all over the place. And we're just consolidating sideways in that range, very, very tight range between 127 and 132. So even on the day, you'll notice for Google, low for the day 128 and high for the day 131. Talking about Microsoft, 322, 323, again consolidating sideways, up over almost 1%, similar to the Nasdaq, but really just broke down below those moving averages, and since then it has struggled a little bit to really find its direction, and it's mostly trading sideways. And actually, I wouldn't be surprised if it does break down below 314 to potentially come down to $292, $290 per share in the future. And finally, we got Enphase and Shopify. Did some shopping today, picked up some Enphase at these prices, 124. Very nice deal in my opinion. Still up 1.4% on the days, outperforming a lot of its peers and the Nasdaq as well. But it's obviously coming down to this green rectangle, which I do consider personally to be a very good deal for Enphase moving forward. And finally, we got Shopify, $55. So mostly consolidating sideways. That's where we are for the most part. We did break down below those moving averages, and right now we are just sitting above $54, $55 per share. Resistance is going to stay put all the way up to $66 per share. So I hope you guys enjoyed this video and a complete update on the markets. The bottom line is that the Federal Reserve obviously was a little bit, I would say, net neutral, but slightly leaning more towards the hawkish side, and the markets kind of handled it pretty well. We were still green on the week, but of course, time will tell what September is going to bring for us, because seasonality-wise, September is one of the worst months of the year when it comes to the market. So we got to be prepared for that as well. And of course, look at the fair values, look at the intrinsic value, look at the valuations to better understand where the risk rewards are and where the real buying opportunities and good deals are. So I hope you guys enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. Remember, only a few more spots left with a 16% annual discount available till the end of this month. And we'd love to have you on board, and you get access to all the benefits and all the material as well. As always, happy investing. I'll see you all in the next video.